Okay, so recording started. Last week when we met, I talked about gap trading, the gap strategy I use, and I mentioned that I will go into more detail into gap. So I will talk about that, and I'll show you some charts, which are the setup for this coming week. And at the end, I'll show you the market charts, just to let you know what's going on in the market. Okay. So before I talk about gap, I just wanted to show you some of the tasks I perform every day, and you should be performing the same way. The best trade, in my opinion, or I'm sure you agree, the best trade comes when you stalk the trade. So the best trade comes when you stalk the trade, meaning when you go through your list of the stocks for setup, possible setup, then you know that these are the possible stocks which will move in your predicted direction, and you stalk those trades during the market hours. Those are the best ones because you have already done the homework. So these are the tasks I perform every day. This is not a complete task, just a subset of all the tasks. There are some other things which go before, and there are other things which go after that. So one of these days I'll talk to you about what goes before and what goes after. So this is the middle portion. So for now, we just concentrate on the middle portion of the tasks I perform every day. So stop the trade. So for instance, I made a list of 63 stocks for tomorrow. So I will just laser focus on those 63 stocks. And the way I do it, I just shut down all other stocks. I have a database of 600 stocks, but I don't want to focus on those all 600 stocks. I just want to laser focus on those 63 stocks, which I know are setting up. Because if I start watching others 537 stocks, then I will miss the entry or the setup on these 63 stocks. If nothing triggers, it's fine. But I'm sure out of 63, one will trigger. So that's the one which is the low risk, would be the low risk trade for me. So the idea is that I must find a low risk trade. So, and I can only find if I stalk the trade. So 63 stocks are manageable. So you must have a way of stalking it. Your system should tell you which one to look at. And from time to time, you just take a look at all 63. But the way you monitor your system should tell you that these are the, out of 63, these are the 3-4 stocks which you should concentrate. So when you concentrate on those 3-4 stocks, and there are 63 on the list, during the day, for instance, 11 a.m. Pacific, the one which was not on the top may come up. So it's like 63 dogs are running, and the dog which was behind came up, started to show up in the front. So that's the one you need to also focus. So when you stalk the trade, you find the low risk idea. So the idea is to find the low risk trade setup. Once you find the setup, when you look at it, you say, yeah, it is familiar setup. You have seen it before 1,000 times, and now it's appearing again. The same thing. It's just the stock symbol has changed. It could be Apple, it could be Facebook, it could be Baidu, Baba, whatever it is. It's the same setup, a different symbol, or it could be the same stock symbol. So if you have a narrow list, you know how the stock behaves. So you find the familiar setup, which is familiar to you, and then the next step is that you visualize it. So this is forward thinking. You, based on your past experience, the patterns emerge in your memory, and then you say, okay, this is what the stock is doing right now. I know the next step for the next day and the second day and the third day, how it will play out. The whole thing is right in front of you. Once you reach that stage, you know where is your risk, how much is your risk, where you will exit, either at loss or at profit. Once you go through this process, which shouldn't take you more than 30 seconds, and you feel good about it. So this is the key. Feel good about it. You need to feel good about it. Makes you excited that this is the trade you need to take. If you don't feel good about it, you should not be taking that trade. So this is the key. Feel good about it. It's like going on a vacation. This weekend I went to Big Sur. So if you live in San Diego, it's like I estimated 4 or 5 hour drive, but it was like a whole day drive. But I was excited. I was feeling good about it, so I didn't mind driving. So I drove all the way to Big Sur. So this is the way the trade works. You feel good about it, not mediocre level of excitement, but super excited. Not the excitement I'm talking about, which you get excited when you hear something, some good news comes in the news or on CNBC or Bloomberg or somebody mentioned in the Facebook. Not that kind. Or you start thinking how much money you will make without thinking how much money you will lose. Not that kind of excitement, or getting excited based thinking you will be rich. No, feel good about it because you know that this thing has worked before. This is the kind of setup it works before, and you have a probability stack in your favor. So you feel good about it. So as soon as you feel good about it, you need to pull the trigger. This is where you don't need to, you cannot hesitate. You do your other checklists fast. Like if you're trading option, you go through your option checklist, check the earnings, check the support resistance, whatever your checklist. So there are rules. So rules, number one rule, number two, number three, number four, number five. So these are the rules. You go through the checklist, because if you don't follow the rules, then you will commit mistake, and everything you don't do, your whole life is a mistake if you are not living by the rules. So if your whole life could be a mistake, you don't want to commit a mistake when you pull the trigger. So when you pull the trigger, you're feeling good about it. While you're feeling good about it, you are going through your rules, checklist 1, 2, 3, 4, 5, and then you pull the trigger. So it's like pulling the trigger is like taking off. The plane is taking off. So this is you getting ready, feeling good about it, pull the trigger. Now the plane has taken off. So once the plane is taken off, you know what is the risk, where you will exit. So then you monitor the trade. So you're monitoring the trade. Now, when you're monitoring the trade, your exit strategy come into play. So you must have an exit strategy. So you have to implement the exit strategy. Sometimes if you're sophisticated enough, your exit strategy goes right here when you pull the trigger. So it's the order, the one thing. You place the order to buy or go short, and at the same time, your exit strategy goes to the market also. Your exit order is already activated. So it's on autopilot. But if you don't do that, it's okay. You monitor the trade, you know exactly how you will take your profit. What is your first target? What is your second target? What is your third target? What happens after the third target reaches? Whether you put the trailing stop, whether you exit completely, where is your stop loss? What happens when the stock hits the stop? Do you put the trailing stop right there when your stop is hitting? Sometimes the stop is intraday hits and then the stock goes up. So all this is a part of your strategy. So exit strategy both on the upside and the downside. And then whatever the trade, you have defined the risk right here at this step. So when you define the risk, either you take a profit or you loss. But it doesn't matter if you take profit or you take loss. You should be feeling good about it. Even if it's a loss, if the feeling you get is negative when you take a loss, it means you are not performing your task properly. Because taking a loss is also part of the trading, right? So when you take a loss, you should pat your back, saying, okay, I put the trade, I followed everything, I stalk the trade. I found the setup familiar. I visualize it. I felt good about it. I pull the trigger right at the time. I monitor the trade. Now, if it didn't work out, it's okay. You pat your back and you move forward. But if you take your profit, then you can pat your back 2 times, right? So then at the end, there are other processes you need to go through. And before that, I'll talk about this some other time. So stalking the trade is very important and feeling good about it when you see the trade is triggering. So tonight you can prepare some stock list and for setup and see if this process works. You must feel good about it. So in the last session, I went through about these strategy. I use breakout strategy, breakout reversal, opening range in detail. So I will not go through these three. This time you can have a recording. I send the recording every week. We send the recording next day. So expect a recording for this session to be delivered to you tomorrow morning sometime. So I don't want to go through this. And then I also talked about these 4: gap up, reversal, what I do at gap up, reversal, gap down, and gap down reversal. So I trade these often, and I went into detail what I do and how I do. So and I will talk about this some other time. So today, I want to talk about gaps and island reversal top. So there are 3 types of gaps. This is what I want to spend 15-20 minutes, and then I'll show you the charts. So there are 3 types of gaps: the breakaway gap, the runaway gap, and the exhaustion gap. So if you understand the breakaway gap, runaway gap, exhaustion gap, you can make money and you can adopt a various strategy. So the stock setup and then implementing the strategy. So your system is producing the trade for you. So just imagine you have a system, trading system, which produces the trade for you. So let's say you have a gap system, which I have. So gap is nothing. It's just basically the gap is if the stock has opened higher or lower than yesterday's close. That's a gap. It could be a 1 cent or it could be $10. So the gap has to be a meaningful gap. So you set up the system, and that is a meaningful gap. The stock is gapping up and has a volume. Early morning, the volume is there. So after you get that, then you need to know what kind of gap it is. Is it a breakaway gap, runaway gap, or exhaustion gap? So knowing the type of gap will help you make money or save you money from loss. So the first is the breakaway gap. The breakaway gap occurs when it's the first gap in the stock cycle. So think about this: the stocks go through the life cycle. There are like 4 stages: the indecision stage, and the greed stage, and the euphoria stage, and then the dwindling stage, the peak stage. So so let's look about take a look at this one. I have another chart which I did not. I will show you next time. It's the life cycle of a stock. So I talk about life cycle on the stock maybe some other time. So just think about this. This is the first stage. So in the first stage, the stock is going through the consolidation mode. So it's going up and down, up and down, and up and down. So there is buyers and sellers. They are just like sitting at the borderline. They are talking to each other slow. The big boys are there. Somebody is selling, somebody is buying, buying, selling, buying, selling. It's just doing it. There is the indecision going on. Maybe the stock fell from the top, from the tree, and it fell here, and it fell here, and then all the sellers are gone. Just some sellers left. They sell it, somebody absorbs that selling, and they buy it. Somebody sells it, somebody buys it. Some good news comes, goes up little. Some good, not the good news which causes the break, just a little good news, and then somebody buys it, and then there's not enough volume, and then it comes down. Then it little goes up, then comes down. So there is a multiple bottom forming, and there's a top forming here. But eventually what happened, there is some catalyst. So when that catalyst happens, or news comes out like a CEO change. If you look at CMG chart at 250, 275, CEO announcement came, and the stock exactly did like this, the gap, and then it's going up since then. So that was the first indication. So some product announcement, some FDA approval, something happened, some news came, and that caused this breakaway gap. So the stock gaps up, and it formed a narrow channel. So this is the channel you see here. So this is like consider it as a channel. So this is the stock gapping up. Now after the stock gaps up, so this is called a breakaway gap because it broke the consolidation rate, this congestion zone. So that's why it has the name breakaway gap. So, and then I think I have a slide here. I'll talk more about it, breakaway gap. And then the stock moves up and then gap up again. So this is called runaway gap. I'll talk more in detail in the later slides. And then the stock moves up, then gap again. So it's called exhaustion gap. So why it's called exhaustion gap? Why is it runaway? And this is breakaway gap. What are the characteristics? I think I should move to next slide. So three types of gap we are talking about: breakaway gap, runaway gap, which is also called measuring gap, and the third one is exhaustion gap. So what are the characteristics of breakaway gap? You see this slide, yeah. So the breakaway gap, it happens at the beginning of significant market move. So as I mentioned to you, the breakaway gap occurs at the beginning of the major trend, starting. So it starts from the consolidation zone, a basing pattern is completed, and now the stock has taken off. It could be a major trend line here. So if you just a second, it could be a major trend line if the stock, because this chart is just showing from here. There's no previous history. This is just an example prepared to give you example of these three types of gap. So let's say the stock is right here, fell. So there is a major trend line. If you draw the line, you will see a major trend line. So this could be a break of the trend line. So if the stock would have broken the trend line or the consolidation pattern. Just a second. So, and the volume should be heavy. So if the stock gaps up above the consolidation mode, the volume should be heavy because that's where the major news has come. What everybody was waiting for, that news, and that news is out, and that's why the stock has gap up, and there's a heavy volume. And the chances are the breakaway gap do not get filled easily. So this gap which occurred here, the stock does not come to fill the gap. It stays above. So now, so what to do when the stock gaps up like this, right? So there are various things you can do. You can buy right here on the gap up day. That's one possibility. You can buy at the gap up open. Another possibility is to wait for the pullback. So the pullback can occur. Suppose the stock goes up, the pullback can occur right at the high of the gap, and then the stock takes off. So that's the one entry. The second entry is the stock to gap down, pull back to the midpoint of the gap up candle. So this is the mid gap. If you look at my cursor, this could be the midpoint. So the stock gap pulls back to the midpoint. That's the second entry. This is a safer entry. And the safest entry is when the stock pulls back to the low of the gap point. So if the stock was trading right here at 100 and opens at 103 and close at 106. So 103 and 106, what is the midpoint? Like 104.50. So this is 104.50 right here. So this is your one entry. This is actually one entry, another entry here, but you should know that the stock can pull back all the way to the low point. So this is your first entry, the midpoint is second entry, and the third entry comes at the low point. So you can add a little bit here or initiate your position. If you miss the move, you can initiate your position at the midpoint, or you can wait for it to come to the open of the gap, and then initiate your entry here, and then the stock takes off. So chances are the stock will not fill the gap. Now the fourth entry comes in case the stock fills the gap right here. So if this was 100, the stock would fill the gap at 100 and then takes off. So your job is to that you stalking the trade. So stalking the trade and finding the setup. And when it comes to this level, you're feeling good about it, right? So you feel good about it, and then you're pulling the trigger. Now, so you stalk the trade, you identify the setup, you feel good about it, and you pull the trigger. Now, after pulling the trigger, you know how much is the risk. The stock you're in, you could get out if it fills the gap and it starts to come down. That's your risk. So it depends how much risk you want to take. So you define your risk when you initiate the trade. So you close the trade. So that was a loss, but you did whatever you were supposed to do. And your exit is you need to set up your exit where you want to exit. So the exit could be you take the distance from here, the bottom of the lowest point of this pattern, the lowest point, and you take the highest point of this pattern, congestion zone. So lowest point and the highest point, you measure the distance and then you add from the gap point. So if the lowest point and the highest point is 10 points, after the gap, you just add 10 points. So that is your first target that you want to exit. So this is one way of determining your target. So that was a breakaway gap. Now the second is the runaway gap. So the stocks, why it's called runaway? Because the stock is running away. There is another news trigger. Something good news came up again. So there was one news, the CEO change. That was the first news. And then after a few weeks, another news came that the CEO is implementing this strategy. He's negotiating with another company or acquiring another company or closing some departments or moving in another direction which the investors wanted. So that news is there. So when that news is there, the stock further gaps up. So that's called runaway gap. And it has another name called measured gap. So I'll explain why it's called measured gap. So what happened in the runaway gap? Markets leap forward. So market move forward. Another catalyst for the market is announced, right? So as I mentioned, another catalyst. So there's some news. The stock gaps up on some news. So stock doesn't gap up for no reason. There has to be a reason for a stock to gap up. The reason, sometimes the stock gaps up for, and the reason is not that good enough. So people don't buy, the trader don't buy as much as they are buying for other reasons. So stock market has no logic. So sometimes the stock is moving up, gapping up, and sometimes and continue, and sometimes the stock gaps up and doesn't continue. So that's where the trading comes from, the skills. So the runaway gap has a moderate volume. The volume is lower than the breakaway gap. And it's called measured gap. I'll explain through the chart why it's called measured gap. And target can be measured by measuring the distance already traveled. So let's look at it. This is a breakaway gap, runaway gap. So let's assume this. This is 103 from here. So 103 and this is 110. So 103, the gap point, and 110. So 7-point move up. Now, when the runaway gap occurs, when the stock gaps up, this is the second gap, you can safely add 7 points from this point. So if this is 103 and this is 110, so 7 points, and it gapped at 112. So 112 and 7, 119. So the stock is going towards 119. So you can set that target, 119. So usually the 100% double the distance. So whatever travel, you just take that distance into the target, and that's why it's called measuring gap, because you can measure the target. Similarly, you can measure the target for breakaway gap. As I explained, you take the low point of here and the high point of this, and you add the distance from here to here. There is another so lowest point. There is another technique which you can use. You just take the center point. So if there is a candle here or the bar, you take the center and measure the distance. So if that distance, you see, if you notice, this candle is a little higher than these two. So if there are two techniques. You can take the lowest. So suppose this candle was here. You can take the lowest and the highest bar, which is somewhere here. That's the maximum distance. Or you can measure it through the center point. So center point could be, the distance could be shorter. So if the center point distance shorter, that is a conservative target. This is your actual target. So there's a conservative target and there's actual target, and you can add from the breakaway point, and that's where the stock is going. So this is your monitoring the trade and your exit strategies involved. You set your target and exit. And similarly, you can measure the distance from here to here and then add to this and then exit. So this is a runaway gap. Now, the third one is called exhaustion gap. So exhaustion gap occurs near the end of the market move. So there's a third news which is announced. So when the third news is announced, or the stock further gaps up, but this gap is not powerful. There's no volume, and it fades quickly, and the gap can be filled easily, and the market trend is over. Basically, there are last retail buyers left, and they are chasing the stock. So this is what the exhaustion gap look like. The bar is tiny, it's not large. So right now, don't. This is just explanation. This is not the real bar. So these are just the straight line. So don't think of a relative. This is a small here and this is long. So you think this is a strong move? It could be a tiny bar or candle. So it could be a little tiny candle. So stock just gaps up because of the news, and then it just dies down. The volume, if you look at the volume, the bar, the volumes is low. The stock just doesn't have any strength because all the buyers are gone. The buyers were here. The professionals were here. They were buying it, and they have capital. They can wait. They can play the patience game, but we cannot. Another set of buyers came right here. The third set of buyer came right here on the pullback, and then all the way the buyers are here. The buyers are chasing, and then another set of buyer came here. They chase here. Now the last buyers are right here. They're on this. So these are the retail guys. They just chase it, and when if the stock gaps down, so let's say the stock just dwindles and moves on the sideways for a few days, for a week or so, and if you look at the pattern, you can count the days, the negative days and the positive days. So negative days, positive days is like balanced, or maybe more negative days and less positive days. So less negative, more negative days and less positive days, or even if it's balanced, but the move is just tiny. The volume is not enough. So it needs a big catalyst for the stock to move up further. It doesn't mean that after the exhaustion gap, the stock it cannot go higher. It can go higher and higher and higher. So it's just resting. The stock is resting with the low volume. Now, any negative news comes, the stock gaps down or pull back. So when the stock gaps down, that's why it's called island reversal. So this is the island is formed. So on a sideways move, on sideways, and then the negative news come and the stock gaps down. So this gap, just like this breakaway gap, is to the upside, is downside breakaway gap. So you can immediately go short. When you see this pattern, you need to, there's no confirmation required. When the stock gaps down, you immediately go short because you were, so let's talk about stocking. So you identified a stock which had an exhaustion gap, and you were stocking it for short. So you were stocking it, and then the stock gaps down. So that's your setup, and you feel good about it. So you need to feel good about it. If you don't feel good about it, don't pull the trigger. And then you pull the trigger. So this is what it is set up. The stalking it, and when gaps down, that's your familiar setup. You know, you have seen it before 10,000 times, that when the stock does the exhaustion gap and goes on the sideways move, and then when it gaps down, it usually keeps coming down. So you stalked it, find your setup, visualize it. You visualize this. You visualize that these kind of bars will form 1, 2, 3, 4, 5. God knows where it will stop. It can just keep going here. So you visualize it, and you feel good about it because you visualize it that it can do this, and then you feel good about it. You pull the trigger. Once you pull the trigger, then you manage it. So your risk is defined. You set the stop right here on the reversal. So in case the stock reverses to the upside and comes here, that's where you need to take loss, right? So you take loss and you go long. So you pat your back at this stage. You say, okay, I did my thing. I stalked the trade. I found the setup. I visualized it. I felt good about it. I pulled the trigger, but damn, the stock just reversed on me, and now it's going up. So the stock is telling you that it doesn't want to go down. The stock will tell you when it comes up. So if you were 100 shares short, you go long 200. So you're long 200. So 100 is covered, and you're 100 long. So then you cover your. So I mean, you make money. Otherwise, you just sit paralyzed. So don't be paralyzed. Okay. So measuring the gap to downside. So it's the same way the way you measure the target for the downside. You measure the target for the way you measure the target for the upside. You measure the target the same way to the downside. So when the target the stock has traveled to the upside, that's the target the stock will travel down when the stock gaps down. So it's not rocket science. I already talked to you about island reversal. So island reversal is the stock gaps up, and then gaps down. So it has to gap down. That's where the island reversal top occurs. So the stock gaps up and then gaps down. And this is another pattern I'm showing you. So stock gaps up and then gaps down. So island is formed. Okay. So this is a very good setup. When you see the stock gaps up and then next day gaps down, why you should ask yourself why it gapped down. What is the reason? Or the stock gaps down and then next day it gaps up at the low level, lower range of the setup when the trend is about to start. So the stock gaps down and then it gaps up. So you should ask yourself why the stock gapped down yesterday and today it gapped up. So you take the trade immediately because you know your risk. So it's a low risk idea. Again, the idea is to take the low risk trade. Okay. So island reversal top after exhaustion gap, market moves sideways. So market moves sideways. It can move for a week, 2 weeks, narrow range. So the bars are narrow, and then yeah. So the exhaustion gap is to the upside and breakaway gap to the downside. That's why the island reversal top is formed. So the stock gaps up, then gaps down. Okay. Okay. So this is the advertisement. So just 30 seconds. So I have a 7-month mastering the markets coaching program, and if you're interested, send me email, and I will send you the appointment link. So you will receive an appointment link, and we will talk about it for 75 minutes. For this session, 75 minutes, there is a refundable fee of $97. So if you join the coaching program, you get your $97 back. If you don't join the program, it's okay. But in this 75 minutes, I will talk to you, explain to you how the coaching program works, the duration, the cost, and I will teach you something. And you will get your worth, $97 worth. So you have to remember, you have to think like this. Let's say you are 40-year-old and you will live 90 years on average, suppose. Just think about it. You can live 1,000 years, but just on average 90. So you have 50 years left. So 50 years left, how much is this worth per year? So you do the calculation. 50 years, I will live 50 years. If I don't do something about it, what will happen after 1 year, 2 year, 3 year, 4 year? Will I live like this, or I need to do something about it? So think in that way. So whenever I invest some money, I just think, okay, I'm 40, suppose you live 90, 50 years. So in 50 years, I will definitely. And another thing is that if you have children, you can pass on what you learn to your children. So just it depends how you look at your life. So I look at that way. Okay, so advertisement is over. Now I show you some charts, which are the setup for this week, and I will watch it tomorrow. So there are 63 stocks in my list, but I have not prepared the chart for 63. I prepared the chart for 10, 15. I don't know how many I prepared. So I'll show you the charts. So out of 63. So this is Abbott. So Abbott, it's just a setup, right? So I'm stalking it, as I explained, I'm stalking it. Tomorrow I will identify the setup. I will identify this. So I'm stalking it. So why I'm stalking it? I'm stalking it because I see the J&J was moving, LLY was moving. We traded J&J, and now it's Abbott. So maybe they are buying. They are buying these stocks. So, and if I draw the trend line, which I explain in detail in my coaching program, just what to do and how to do. So look at this trend line. So I see the stock is bouncing from the trend line. So I am stalking the trade. I will identify the setup tomorrow. If I see the setup is familiar, I will visualize it, that visualize this, that it will go towards 67 and maybe break the 67, 68 level, and it will go to the moon. So I start visualizing this. And on the downside, I can visualize that, okay, downside, this is my support, 65. And I have 64.28 support also, the 50-day moving average. So I'm visualizing where it can go down, and I'm visualizing where it is going up. And if I feel good about it tomorrow, and sounds familiar, I will pull the trigger and I will go long. So the reason I'm looking at, because of this hammer, small hammer candle at the support, and this candle is another bullish candle. So tomorrow I'll see what Abbott does. This is Adobe. Adobe is coming with the earning. So so I need to stock this trade, right? What happens to ADB? So I'm stocking it, and if I see the run up, I may go long on this because I see the setup. I say, what is my risk? The risk can be all the way to the 200-day moving average, but I need to evaluate tomorrow or just avoid it because of the earning. But it doesn't mean that if the earning is coming, I just totally ignore it. I can buy the stock after the earning announcement. So I can take advantage of after the earnings. So a lot of good trades come right at the earning. Earning is announced pre-market. That's where the trade comes at the you watch the pre-market action, and then you go long or short on right at the open when the so you avoided the earning, but you took the advantage. So so you can play that way. So I know ADB coming for earnings, so I just watch it and see what it does. If it breaks, maybe I go long after 270, or it breaks through 270 and sits at 270 level here, and then makes the U-turn to the upside. I go long at that time. Or after earning, it gaps up and goes up and then pulls back, sit here again. So I'm stalking it, and then the fresh buying comes, then I go long. So it's just a setup. I'm just stalking it. Another one I'm stalking is AMAT. I prepared this on 6th of September. I don't know what happened on 7th of September. So it's just a stalking. So this is a downward sloping trend line. So downward sloping trend line is not as strong as upward sloping trend line, because in the downward sloping trend line, the stock is drifting lower. So it's a bearish, but it doesn't mean that it cannot go up. So this is a downward sloping trend line. This is a downward sloping trend line. So I don't know what happened to 7th of September, but this was a setup that I see that, okay, this is just sitting here at 40.78 support. So what happened on 7th September, I don't know. Amazon. So Amazon, I mentioned the target of 2000. Now I know that once the stock breaks the 2000 level, it goes to 2500. So it's like magic. So there is no science. So if somebody asks you where Amazon is going, say Amazon is going to 2500, and when it goes to 2500, then you can say, didn't I tell you 2500? And Jeff Bezos will be the richest man for a long time. So you can say that too. So now Amazon, after breaking 2000 levels, it went to 2050 and it pulled back. So it pulled back and sitting at the upward, this is the upward sloping trend line. So it's sitting at upward sloping trend line in 1947. Let's see if I prepared Amazon chart. No, I did not prepare for 7th of September. So it's a 6th of September chart. So Amazon is sitting at the upward sloping trend line, which is support. So any reversal to the upside is another entry for you. So it pulled back about 100 points, right? So 100 points. So you will be getting Amazon at the discount, 100 points, because somebody bought it 2050 or 2040, 39, where it made 1 trillion mark. So when it moves up, this is your low risk trade. You know, if it breaks this trend line, you exit. But if it starts moving up, it's going to 2500. This is ATVI. So this is another one. As you see, it's bounced at 200-day moving average, and this is a super bullish candle, and it's sitting at the downward sloping trend line, which is a resistance. So resistance is right here at 73.57. So I'm stalking it, and if it breaks this trend line, I'll go long, because I will feel good about it. And why I will feel good about it? Because I have seen before that when the stock breaks the trend line, it continues to move up. So I'll feel good about it. I'll pull the trigger, and then I will monitor the trade. This is AVGO. So AVGO, we have AVGO in my spread service. So I have a spread service, and AVGO target is 240. So right here. So I don't have any straight positions because AVGO moved up too much on earning, so it gapped up. So I'm just stalking it, and on one hand I have a spread, but on the other hand I want it to come down to this level. When it comes down to 225 level right here, and I see it sitting here, so I'm expecting that it comes down to 225 level. Then I want it for AVGO to sit here at 225 level. Why? Because this was a resistance level before. You see how many candles bumped up and down, up and down, up and down. So this was a heavy resistance, and it was a support. So look at this one. It was a support here because it bounced, but then it became a resistance. So support became resistance. That's called a change of polarity. So a change of polarity. And this is also another thing, confluence of candlesticks. So the resistance, heavy resistance here. But in one shot, the resistance is broken. When this resistance is broken, now this is support again. So 225 is my support. So I want to buy when the stock comes down to support level. I don't want to buy when the stock is away from support. It's like 7 points away. So I have more risk. I want to identify a low risk idea. So how do I identify a low risk idea? By stalking the trade. So I stalk the trade, and then I look for the setup. So I see the setup. Setup is 225. If it comes to 225, 226, that's my setup trigger. And then I see it's sitting here and then moving up. I will feel good about it, and then I will pull the trigger. And my exit will be here, right here, break of 250, this 50-day moving average. So this is the process. This is AXP. So AXP there's nothing special about AXP. This is the Friday chart. There's nothing about AXP except this. It looks like this candle telling me that the support is right here. This is support here. It bounced up, and then it broke this low, and then it bounced up, and then now it's sitting here. So AXP could move up. So it's all about Will it move up or what it will do? So there's nothing special. It's just on my stock list. So I'm stalking AXP. So I'm stalking AXP, and then when it starts to move up, I know that this is a resistance, but this is a minor resistance. This is not a major resistance. This is not something like this. So there's a difference in this resistance level and this level, right? So you can see the difference. So I know that if one starts moving AXP starts moving up, it can easily break this. This is not a heavy resistance, and it can go to uncharted territory. So it will make a new high. So I'm just watching it, stalking it. Next one is Boeing. So all the defense stock like Boeing, Raytheon, NOC, and there's another one, LMT. All the four. So you should know when you're trading, you should know the stocks in its category. Who are the major players? So the defense there are four major players. So you need to know that. So and then you need to know what the others are doing. So out of all those four, I see this that the Boeing is hanging on to the 50-day moving average, right? So I'm stalking it. Actually, I'm in the Boeing already long. So I was watching this on 6th of September. I was stalking it. So I'm stalking this, and I see that it's hanging on to the 50-day moving average, hanging on to 50-day moving, and then it bounced up. So I pulled the trigger. So I was stalking it. I visualize that it can break. Move is up to the upside, and it can easily break this resistance and start moving up. And on the downside is this side. 332 level. So I visualize it. I felt good about it on the move up, and I pulled the trigger. So I felt good about it. I pulled the trigger. Now it's set on autopilot. My exits are there on the top, and my exits are here at the bottom. So I'll just manage it. This is what's on the 7th of September. Yeah, on Friday, Boeing did. So you see how many times the stock pulls below 50-day moving average and then close above it. That's your sign that the stock doesn't want to go below 50-day moving average. It doesn't mean it cannot do that. There's nothing written on stone, but I'm feeling good about it. So I don't know about you, but I'm feeling good about it, that it's sitting at 50-day moving average, and there's a big chance for me to make money. So I'm feeling good about it, and I took the trade. I'm watching Baba, and on Friday, I was not that much feeling good about it. And the reason was why I was not feeling good about it, because I want Baba to cross this line, this support line. So I was watching Baba and was seeing, do I feel good about it? So I was not, but it's just on a stock list. So on a stock, STALK, stock list. So stock is on my stock list. So so this is a resistance, and it failed. And then there's a news that Jack Ma has resigned. So the stock was down $2-3 after hours. So tomorrow, now it doesn't mean that Jack Ma has resigned and then I start shorting it. The stock declined $2-3 after the news, but the stock can do the opposite. So then I will feel good about it. Maybe that resignation of Jack Ma turns out to be a good news. Who knows what? So I will feel good about it when suppose Alibaba goes above 166, 67 level and starts moving up. So I will, at that time, I will feel good about it. Otherwise, I'm not feeling good about it. It's just on my watch list. This one, BBY. So BBY is on my stock list. I'm stalking it. And if I draw the trend line, I know that this is closing and hugging this trend line right here. So it's just sitting here below, but there's nothing for me to feel good about it, right? So it's only on a stock list. So once it starts moving up, I will visualize it. I will visualize that it will fill this gap. I will visualize it can go to 84, and if I feel good about it, I will pull the trigger on BBY and then monitor, put my exit strategy and monitor the trade. And when I'm putting the trade, I need to know how much risk I'm taking, how much I'm going to lose. First question you need to ask is how much you're going to lose, not the question how much you're going to make. So that's the wrong question you will ask, how much I'm going to make. The right question is how much you're going to lose. Another one is Baidu, another Chinese stock. So I'm feeling good about it right now because I'm not that felt good that I'll pull the trigger. I'm just watching it because now I know when I draw the support. So this is the support line. You see here, this is the support. So this is the support line. So the support is not a price area, it's a zone. So this is the zone, right? So support is a zone. So Baidu is sitting in the zone. So this is on my stock list. So I put it on my stock list. Now on Monday, Tuesday, Wednesday, Thursday, Friday, whenever I see that it stays in this, and then it starts to move up aggressively. One aggressive entry is when it touches this line at maybe at 212, 213. So this is an aggressive entry. The another entry would come right at the above, and it starts to move up. So if I see the reversal to the upside, I won't go short because I know this is a strong support. So it's in a support zone. So I wouldn't be going short, I'll go long. So if I feel good about it on Monday, Tuesday, Wednesday, Thursday, Friday, whenever, I'll take the trade. Otherwise, I have other 62 stocks on my stock list. So total of 63 out of 63, this may not be the one. Caterpillar, so I just show you the Caterpillar. This is the 31st August chart. So it's sitting on 50-day moving average on 31st of August. So it's like 10 days ago. And then it did this. Yeah, so it's still sitting on 50-day moving average. So now on 5th of September, it's still sitting on 50-day moving average. So when it's like a giant hand, do you see this hand? This is a giant hand. It's like one giant hand in like in Vietnam they have, or in Thailand, this giant hand of someone. So it's sitting on the giant hand, and it bounced up. So this was feeling good about it kind of trade, Caterpillar. So when Caterpillar is moving, you look at the DE and say what DE is doing. So both of them doing good, okay, you feel good about it and you take the trade. And that's what happened. It moved up. So on a 50-day moving average, stock moved up. Suppose you were stalking it, you took the trade, and you could have closed it right here or wait for it to break to the upside. And when it breaks to the upside, then another resistance is 145 level, and then it goes up. This CBS. So CBS, I felt good about it. And we already have a long position, and I felt good about it on 6th of September when I saw this kind of chart. So this is a super bullish chart. You see this big candle? So it took over all the previous candles. So when I look at this, I felt good about it and I took the trade. So I asked myself, am I feeling good? I said yes. I asked myself and I answered myself and I took the trade. Then on Friday, it's doing this. So when two candles back to back, so I would wait for it to move further because the stock is saying you need to hold me, don't exit. So there's no exit yet. So who knows, it can go to 59 and go up. So we are holding CBS. This is CLX. So on 5th of September, I was feeling good about it. I was stalking it, and this is what happened. On the top, when the stock is consolidating, ping pong, doing ping pong, two things can happen. The stock can gap down or the stock can go up. One of the two things happen, right? So you wait for the stock to give you signal. Either breaks down in the form of gap down. So remember the gap down, exhaustion, the breakdown gap. So it needs to gap down. If it doesn't gap down, then it needs to tell me that it in this fashion, it wants to go up. So when I saw CLX like that, I have a stock service. I send them alert to buy CLX and I bought the shares. I'm still holding CLX shares. So I felt good about it, knowing that, okay, this is trying to break the consolidation. And this is still, I'm still feeling good about it. You see what happened? So it's going to new territory. So it broke. It did like this, right? Felt good about it. I pulled the trigger and I'm still feeling good about it. Okay. So Costco is super bullish, and I missed the trade. So I'm not feeling good about it. So Costco, if you look at it, is in a super bullish trend to the upside. And remember how the Costco was trading when Amazon announced. If you remember, I think this was the day when Amazon announced something. Well, maybe Whole Food news came out, something, the retailers news, and all the retailers were tanking. The Costco tank like that. And after that, Costco tanked to 175. Now it's 234. So if you go to Costco, you spend $300, $400, $500. Everybody is spending 300, 400, 500. Everybody's coming out with the full, sometimes too big trolley filling the car. So the Costco is super bullish. So I waited for it to pull back. The pullback did not come, and it just kept going up and up. So this is the chart of Costco. So any pullback on Costco is a buy. If you have it, good for you. This is CRM. So CRM, I'm stocking it. I already have it, but I'm stocking it for more entry. And the reason is that it's just consolidating after the move up earnings. It's just consolidating and sitting on 50-day moving average. So any move up is another trigger, and I need to feel good about it, and I pull the trigger, knowing that this is a strong support area. Another one is CTRP. So CTRP, sometimes the stocks gives you the clue that it has reverse is trend, and now the new trend has begun. So see how it crashed. It just crashed from 52 all the way to 37, and it reversed with a gap up. So this gap was the first signal. So this is what happens. This is a downward sloping trend line. You see that? And this is a downward sloping, just a second. So this is a downward sloping trend line, and this is a downward sloping resistance line. So the stock is sandwiched in between. So the stock is sandwiched in between, and it tried on 6th of September morning, it tried to break through this resistance line. So it already bounced above the support line, right? This is a support line. It tried to break the resistance line, but it failed right now. So it's doing this. It's still okay. So it came back down below the support line. So any move back above the support line with the volume, I will feel good about it. And then I know that this bottom is formed 37. So my stop is below 37, and it's a long-term buy and hold kind of thing. So stop below 37 and move above 38 is a buy, another buy. Cyber. So the cyber security stocks are moving. The Palo Alto gapped up. I'll show you the chart of Palo Alto. So FireEye, Cyber Arc, and Palo Alto, all these three. So when 2 or 3 stocks in the same category giving you some kind of signal, buy signal, or showing you some movement, then you need to watch it. So if you see Caterpillar and DE, or Cyber, in Cyber it's CYBR, FEYE, or SPANW, you need to watch all 3, and then you take the trade. So in this trade, or in this setup, I have shown you many times. I'm showing you again. I showed you Apple chart before, what Apple was doing and what it did after it, it did this. So it's doing this. It's moving up and it's sitting on the trend line. So you see the trend line is just sitting up and sitting here, bouncing up and down. So the chances are high. So I'm just stalking it, and the chances are that it will move up. If it wants to move down, it needs to gap down. So it needs to gap down. If it doesn't gap down, it's moving up. And when it starts to move aggressively, I'll go long. And I watch FireEye and Palo Alto. So all those 2 charts, this one, whichever looks best, I'll go long. This is Delta. All airlines looks like they are on the reversal mode. So DAL, AAL, JBL, all showing the reversal to the upside. So I'm just watching it. So this is DAL chart. This is DE chart. So you see this giant hand. This is a giant hand of in the shape of 50 days. So when you see a giant hand of a 50-day moving average or 200-day moving average, and the stock is doing like this, you need to go long. And this is what happened to DE. it moved up. This one is eBay. So eBay is also on my stock list. So I'm watching it because of this bullish candle. And if it starts to move up, I will feel good about it and pull the trigger. This is Etsy. So it's again the same format, 50-day moving average sitting. It has a resistance till 50. It needs to move up with the volume, and I will, because the volume is dried here. You see the volume dried after this move. So I'm just watching it. Who knows, it starts to take off. So when it starts to take off, it breaks 50 and keeps going. This is EW, Edward sign. So it's again, it's an upward sloping trend line. It's sitting on the support line and it needs to break this. So if it breaks this, a 50-day moving average and this downward sloping resistance line, I'll feel good about it because it's bouncing. So my risk is defined and I know if it breaks, it will go up. So it's just on my stop list. FNSR, I felt very good about it on Friday. Look, when I saw this, so it broke the long-term resistance here at 21. So this was taken, this chart was taken at 10:41 a.m. So I felt very good about it. So when the stock breaks the resistance with this big bang, it's like a big bang. So the chances are that it will continue, even if it pulls back intraday, because there's a buyer and seller, they're fighting. Here the buyer took over, and later the sellers or some profit taking came, and the candle became like this at the end of the day. So it was looking like this, and it became like this. So I was feeling good about it. I was not feeling that good about it, but I still have it because I know that it broke the resistance intraday. So at the end of the day, it's a pullback, and when overbought level or reach the overbought level, when overbought level is released, it should continue to the upside. So now the 2050 is the trigger. This one, FireEye. So I showed you Cyber. Now I'm showing you FireEye. So FireEye also gapped up. Palo Alto gapped up because of earnings. So they are just showing the sign of moving up. So it's on my stop list. This is Grubhub. So Grubhub also showing sign of upward move. And I need to feel good about it when it breaks. It starts to break this line, resistance line. GWPH. So it's sitting again, it's sitting at support and at 50-day moving average. So this is a big resistance. So it's sitting at the resistance. This has a resistance here. It needs to break. So I'm not so excited about this, but just I'm watching it. Another one, J&J. Yeah, so I felt good about it on J&J when I saw this chart on 5th of September. And the reason I felt good about it is at the top, the candle is doing this big move. So I said, okay, I take my chances and I'll go long because I visualize that it will break this resistance. So when I visualize it will break, I need to go long. And this is what happened. The visualization came through and I exited right here and locked the profit. KORS, Michael Kors is just sitting here at support. So it needs to move up aggressively for me to be excited and feel good about it. So once it does that, I will go long. Otherwise, just on nothing to be excited right now. It's on my watch list. Netflix. So on 6th of September, I saw this and I said, this looks familiar to me. When the stock gaps up, and this is a resistance line, it gaps up above or at, I said I will take my chance and will go long on Netflix. So I felt good about it when I pulled the trigger. And it's still doing this. So it's still sitting here. And if it moves up, then it moved up a lot intraday, but it closed like this. So it pulled back. So Netflix could break this 363 level and it starts moving up. It has pulled back. You have to see it pulled back from 420 to 340, or actually it pulled back right here at 310. So from 420 to 310, how much? 110 points. So 110 points move back down. And right now it's sitting here. This was a target. Actually, 420 was my target. 420 is very important number in India. So 420 was my target, and it hit. So I gave 420 target way long time ago, and it hit exactly at here. If you remember my email, and now it's setting up. So 420 is was important target. Never mess with the 420 guy. Okay, so Nike is setting up for long, so it gap down. You see when the news comes, like their advertisement, so um, that's your opportunity to go long, not to go short. And all those burning of shoes and all that, that's bullshit. The stock does the opposite. It's just temporary. You should be happy when you see that kind of news, and then you see the stock gap down, then you say, okay, I'm going long. So you should be preparing yourself to go long on Nike, not to go short. And this is a candle. The pattern is telling me that Nike is getting ready to take off. So this is your opportunity to watch it and go long. When you feel good about it, you go long. Now has triggered on Friday based on this candle. So I bought few shares. So I did not buy much. So I felt good about it and I pulled the trigger and I bought now shares. So now it looks like it's gonna go up. Another one is NTAP. So NTAP, look at this, is sitting at 50-day moving average. So you should watch it, and when you see the surge in up to the upside, you should feel good about it and buy NTAP. This is the Palo Alto Network chart. So it gapped up on earning, and I just want for it to come down to some 225 level right here to fill the gap. 225 is when it pulls back to 225, it will fill the gap, and then if it sits and move up, I will feel good about it and then pull the trigger. Or I have Cyber and FireEye. PayPal, you see PayPal is sitting on 50-day and upward sloping trend line. So when it bounces and go up, I do have a long position. I will add PayPal because it's a confirmation that it wants to go up. Last one is Roku. So I have a Roku position since 60.59 level. This chart was prepared on 30th August and sent to members. And the target, the first target was 65 and it hit. And this is the way I calculated the target. I drew this line and it touched. So this is the resistance line, 65. So on 30th of August, it gave the signal and it did the 65 exact. So you see 65. So it's sitting at 65. Now I have not exited yet. And the reason is that the stock is moving up to the resistance line with a bang. So when the stock moves up to the resistance line with a bang, the bang continues. Chances are it will continue, and it will. My long-term target on a Facebook about 4 or 5 months ago, when it was trading at 39, 38, I gave the target of 75, and the jerks over there in the Facebook group, they were laughing. The 37, 38, and you see 75. They may not be laughing right now. So it's at 65 right now, and if it breaks 65, it's going on 75. So if you had bought here 37, 38, when I gave a target of 75, it's a 100% gain. So now you just watch. So you should feel good about it when it breaks 65 with a bang and then go long if you don't have it. But I do already have Roku in my portfolio. Shopify. So Shopify was pulling back, right? So I was watching it on Friday and I had it on my watch list, on my stock list. And when I saw the move to the upside, I felt good about it because this is a very bullish candle. I entered right here. So I knew from where it's reversing. This is a solid. It broke the support, but it is bouncing off on the multiple support. So I pulled the trigger and I sent the alert to go long, and it broke the resistance. Now it just another 1 or 2 days, it should break this, and I will feel very good about it. It can go to 150. So this is a super bullish signal. Square keeps going up. So on 9th of September it looks like it's another leg up. and 91, 92, it will break. And when the stock is trading at 90, the chances are it's going to 100. So this is another super bullish, super bullish stock. VLO is sitting at same pattern, 50-day moving average support. I will feel good about it when it reverses to the upside. So I'll watch the crude stocks and the crude futures and see what it does. Workday. So Workday fell. We bought in. I also have earning play service. So in earning play, I don't do strangle or straddle or butterfly or condor. I don't do that. I just go straight via calls and puts. So far this season, I only have one loser and all winners. So I send the alert to buy Workday puts, and I send the alert saying we have an edge. And the edge we had is this, just like in the Facebook puts, this is a Workday puts. So I send the alert to buy puts, and this is the edge. I mentioned in my alert that we have an edge, go short on Workday, because it was hitting this resistance line. So the chances were high that any earning, even though if it's a great earning, it's bumping to the resistance, it will fall enough to give us some profit. We bought puts for $1.30, we sold for $4 next day. So we knowing this, that this is a strong stock, I cannot be greedy on my puts. So I exited at $4, bought at 130. Now, knowing that this stock is a super bullish, and I'm watching it to go long. So I'm stalking it, and as soon as I feel good about it, I will see the pattern reversal, because I've seen it many times that stock goes up. When it starts moving up, it just, this is the bottom, 140 is the bottom. So knowing this is my risk. So I define my risk. I know my target is to the upside. I will pull the trigger and visualize it that it goes up and make a new high. I think this is the last one, MUBA. So MUBA is also bouncing. There's nothing special about it. I'm just watching it, and if it shows me something, I'll just go long. Otherwise, just ignore it. Out of 63 stock. This is the chart. Okay, so the stock charts are over. Now I'm showing you just the market charts. So market, there's nothing fancy about Dow Jones. It's just doing this sideways. Nothing fancy about S&P. S&P is pulling back. It may pull back more. So it closed at 28.71. So there's nothing here. It filled the gap. So this gap was filled. This gap created here, and it got filled right here. So there's nothing. It's just sitting at support. NASDAQ is sitting at support, 50-day moving average. So this is the market you need to watch, which is at 50-day moving average. And NASDAQ should bounce above 7375. And Russell is also sitting at this important support line. So NASDAQ, so out of 4 index, which one you will watch? You will watch NASDAQ 100 and Russell. That will give you the clue about the market. And that's it. If you are not a swing option member, I have a swing option service, which is on the website. You can see it's right now it's only $27, only for those who have not taken this trial before. If you're an existing member, of course, it doesn't make sense for you to switch to 27. I will not allow. So 27 is for 2 weeks. You can sign up. You will receive an email an hour from now. It will have a PayPal link. You can copy and paste on your browser and take the trial. After the trial is over, you will be charged automatically at the regular rate. So, and another one, last one is a coaching session, 75-minute session. If you're interested, send me email. You will receive the email after an hour. It has an appointment link. So you take that appointment link, copy and paste, and book the appointment, and then go to the PayPal, send me $97, and we will talk for 75 minutes. And if you join, you get that $97 back. If not, I get to keep it, because I will teach you something in this 75 minutes. So I'll see you on September 23rd. So next webinar or coaching session is on 23rd. I'm not available next Sunday. Thank you very much for coming. I really appreciate it. I love you. You make my day brighter. Thank you very much. And I will prepare something else for next 23rd. So don't miss it. I may not be covering the charts. I may be covering something else. Thank you. There are so many things I can teach you. Thank you. Bye.